If you are still confused on how to do your top-down analysis, pay attention to this video. This is Tunde Thompson. I'm going to be using an example of a trade we took on Monday in the VIP Signal group to explain how to do your top-down analysis. Before we proceed, don't forget to follow my account so that you are not going to miss any of my teachings. Well, let's go straight into it. So this is how to do your top-down analysis. The first thing you have to do is to go to your higher time frame. I mean, if you can go as high as the weekly or the monthly to understand what is really going on in the higher time frame. The first thing I can see let's go to the monthly time frame. Inside the monthly time frame, I can see that the overall GBP structure is actually bearish. And again, going into the weekly time frame, I can see that there is actually a fair value gap here, which even if the market wants to buy or the market wants to sell, they are still going to react towards it. So everything you have to do, you have to always label it. Okay, this is a weekly fair value gap. Then I can now drop into the daily time frame and let me see what and how the market is reacting. And don't forget, this is Monday. And Monday is a type of market that once you don't have news, it can actually go anywhere. So in case I have to mark out this fair value gap, the opposing fair value gap, which is the daily fair value gap. And remember, markets usually trade from fair value gap to fair value gap. So I assume and I believe that, okay, once it has traded into the weekly fair value gap, they can trade us into the daily fair value gap. And because the trend is actually bearish, they can even sell us lower. That one is another story for another day. Then let's go into the 4-hour time frame. I can see series of up structure. Then I say, okay, they've not really changed structure. Then I can go into maybe like the 15 minutes time frame and let's see. The 15 minutes time frame ended up with some sort of consolidation. And remember, your type of liquidity, but I mean previous session high, which is previous session high, is a form of liquidity. So if a market is at a point of interest and they strip any form of liquidity, then they can actually go short. Then at this point, this market is too aggressive for me to say, yes, I want to go against it. Then I went down into the lower time frame, let's say 5 minutes, and I'm trying to look for any minor structure I can see that they can actually help me that is going to actually help me to actually maybe sell the market. But we should not forget we have to wait till we enter the session. So luckily for us, we have this whole minor consolidating market and all that. So we have our valid structure. And if you're a beginner, please stay away from 1 minute time frame. Our last structure that we had should be this place, this low here. Okay, so I'm waiting. I'm looking at what the market is going to do at this low. And once they take it out, that is my sell. So I can just put an L there, maybe like a low. Then let's go maybe like 30 minutes time frame and let's see the way the market is reacting towards it. Okay, so I can see that they really drop down. They drop down aggressively below it. And we should not also forget that if this was to be a true high, which is the previous session high, they will not take it out with the wick of the candle. In the 30 minutes time frame, they took it out with the wick of the candle. So it signifies that yes, they are ready to go short. So I can go into maybe like 5 minutes and enter at current market price since the structure has been broken, or enter at limits. But preferably in a market like this, it's better to enter with current market price since you are dealing in session. Okay, so at this point, I've marked out my point of entry, my exit, and everything. So in case of spread, you can adjust your stop loss to this high. Then let me just say I enter somewhere here. So this is 1:4 trade. So let's place the trade, and let's see what we have. I'm placing the trade. I'm selling. Let me risk 2%. Then let's save this, and let's see what the price is going to do. So since it's Monday, I was not actually expecting them to actually do much, but I know they're actually going to respect it. So as a trader here, if you're a session trader, towards the end of each session, you should be ready to close your position. Let me make this faster. Let me make this faster. So we really see we can see this heavy drop that we had in this market. So the whole market is still consolidating and all that. So I think we held this trade for like 3 days or thereabouts. But no matter what it is, no matter how it is, the market is still going to move from fair value gap to fair value gap in as much as is in line with market direction. So look at it, and I hope this actually helps. If it does, don't forget to follow my account. This is Tunde Thompson. There are still a lot of lessons that you can learn from our trade. You are welcome.